Okay, let's dive in. Welcome everyone to the Deep Dive. This week, looking at October 20th to the 24th, 2025, the sources were just packed. I mean, real pressure cooker stuff in finance.
Yeah, it's quite a mix, isn't it? You've got this blend of, updates to the old guard financial plumbing side by side with just explosive crypto and AI news.
Totally. It feels like major shifts are happening.
Yeah.
Regulatory consolidation, stablecoins potentially taking over cross-border AI agents, even threatening bank profits.
It's the speed, I think, that's really striking. How quickly traditional finance and compliance have to adapt. We're basically watching the rules of money get rewritten almost live.
Right. So our goal today, as always, is to cut through that noise.
Yep, distill the key developments, payments, compliance, fintech, give you that shortcut so you're totally up to speed.
Perfect. And before we get into the regulatory thicket, a quick thank you to our sponsor, Paycademy.
Right. They really emphasize that you just have to keep learning in this space. It changes too fast.
Exactly. And speaking of mastering the rules, they've just launched two really timely courses. One's on Regulation E, crucial for consumer rights, error resolution, all that.
Essential stuff for electronic transfers.
And the other's a deep dive into Regulation Z, truth in lending, APR calculations, the complex bits.
Definitely worth checking out if you need to get sharp on those fundamentals. Look them up.
Okay, segment 1, regulation and risk. Kicking off with global compliance, it feels like the theme is consolidation, right? No more fragmentation.
Absolutely. Look at the UK. Big move there.
Okay.
The government just named the FCA as the sole supervisor for anti-money laundering for professional services.
So lawyers, accountants,
Yeah.
everyone under one roof now for AML.
Yeah, previously it was scattered across, 22 different bodies? Now it's just the FCA. Much simpler, theoretically more effective.
And you see that same logic elsewhere.
Definitely. It's a global thing. Realizing fragmented oversight just doesn't work against sophisticated financial crime. Look at Canada.
Right, they're launching a new agency.
A dedicated financial crimes agency. Why? Because reported fraud losses are up almost 300% since 2020. The estimated hit is nearly $11 billion a year.
Wow, 300%. That's staggering.
It is. So this new agency is meant to bring expertise together, focus on those complex, high-level scams and money laundering networks.
And meanwhile, crypto's still getting a lot of heat, Europe especially.
Yeah, the French regulator, ACPR, is really tightening AML checks on crypto exchanges. Binance is specifically mentioned.
And that's happening just as France is lobbying for more power under MiCA, the big EU crypto regulation.
Precisely. They want a bigger role in overseeing the sector. And enforcement isn't waiting. The UK's FCA just filed a civil suit against HTX.
HTX, the exchange. What for?
For unlawfully promoting crypto asset services to UK folks. It's a clear signal. The rules apply now, play by them, or face consequences.
Okay, and on the infrastructure side, there was that guidance from New York's DFS about third-party risks.
Ah, yes, the TPSP guidance,
Yeah.
third-party service providers.
Can you unpack that a bit? TPSTS feels like a buzzword, but what's the real risk?
Well, think about who powers modern finance. Cloud providers, right? AI specialists. Fintech platforms that banks plug into. Those are TPSPs.
Okay, so critical vendors.
Exactly. They offer huge efficiencies, but they're also a concentration risk. If one major cloud provider goes down, or one key AI vendor gets compromised,
It could hit dozens of banks instantly.
that's the worry. So regulators like DFS are demanding much tougher diligence from banks, better contingency planning. You need to know your vendors inside out.
Makes total sense. And we saw banks acting on fraud prevention, too. Samba Bank in Pakistan.
Yeah, they adopted BPC's Smart Vista fraud management. It uses AI and machine learning.
To meet Pakistan's new digital fraud prevention policy.
Right, they're specifically targeting that rise in card-not-present fraud, mobile app fraud, the digital stuff.
And tech is fighting back on the software side, too. Ondato launched something.
AML Ranger. It's an interesting one. A free AI tool for real-time AML screening.
Free. For sanctions, PEPs, adverse media checks.
Yep, automates it. Looks like a good way for smaller firms especially to get a handle on their AML workflows without a huge investment up front.
Okay, let's shift gears. Segment 2, stablecoins. It feels like they're moving from the fringes right into the mainstream now.
Absolutely leaving the niche.
Yeah.
And you've got legislation helping pave the way, like the context around the Genius Act in the U.S.
Right, pushing for proper backing cash or short-term treasuries, structured issuance.
Exactly. And the big institutions, they are piling in globally.
Like Sony Bank, filing for a U.S. national crypto bank charter.
Through Connect Your Trust, yeah. specifically to issue a USD-backed stablecoin.
That's fascinating. Why go the full national bank charter route, though? Seems like a lot of compliance overhead for just a stablecoin.
But that's the strategic play, isn't it? They're buying instant regulatory credibility.
Okay, so trust and stability from day one.
Exactly. An OCC charter signals robustness. That's vital if you want institutions, big corporates, to actually use your stablecoin for serious settlements. Gives them a huge edge over maybe less regulated players.
And it's not just US dollars. Japan's big banks are doing a yen version.
Right. MUFG, SMBC, Mizuho, jointly launching Progmat. That's their yen-pegged stablecoin infrastructure, aimed squarely at corporate settlements.
And even Zell's parent company, Early Warning Services, they're looking at stablecoins too.
For international cross-border payments, yeah. Using stablecoins to potentially make those faster and cheaper.
The market data seems to back this up, right? That EY survey.
Oh, yeah. It predicted 54% of financial institutions and corporates expect to adopt stablecoins in the next, 6 to 12 months.
Half of them, within a year.
That's what they're saying. And the projection for 2030, stablecoins could handle maybe 5% to 10% of all cross-border payments.
Which translates to?
Somewhere between $2.1 trillion and $4.2 trillion a year. Massive numbers.
But the risks haven't gone away. Fed Governor Barr was pretty vocal.
He was, pointing out the obvious, really. Stablecoins don't have deposit insurance like bank accounts. They're vulnerable to runs.
So, need strong guardrails. Capital, liquidity rules.
That's the argument.
Yeah.
And we saw a pretty dramatic example of the technical risk, didn't we, with Paxos?
Oh, the $300 trillion oopsie.
Exactly. Accidentally minting $300 trillion in POI USD during some internal transfer.
I mean, $300 trillion? That's more than global GDP. Must have caused a few heart palpitations.
I'm sure. But the key takeaway, which Paxos emphasized, wasn't the mistake itself. It was how it was fixed.
How was it fixed?
They publicly burned the excess tokens on the blockchain, permanently destroyed them, and crucially, anyone could verify that it happened.
Ah, so it demonstrated the transparency of the underlying tech.
Right. You can see the transactions, see the burn. It's auditable in a way traditional systems often aren't. So error, yes, but also a demo of blockchain's potential transparency.
Interesting angle, but there's still geopolitical caution too. China and Hong Kong.
Yeah, it seems some Chinese tech firms put their Hong Kong stablecoin plans on hold.
Why? Worries about undermining the official digital yuan.
That seems to be the concern from mainland authorities. They want to keep control, promote their own E, C, and Y, not have private stablecoins competing too directly, especially offshore.
Okay, let's move to segment 3. Existing payment rails, open banking. Things are speeding up there too.
Definitely. In the U.S., the established rails are still growing fast. Notch saw ACH volume up 5.2% in Q3. B2B up 10%.
And real-time payments.
The clearinghouse's RTP network hit a new record. 1.8 million transactions in a single day. It's not coming soon. It's very much here and growing.
And that acceleration is global.
For sure. Look at Tunis enabling real-time cross-border into Colombia, using their new national system, BRIB.
BRIB? Is it widely used?
Apparently, 76% of adults in Colombia are already using it. Shows how quickly these national instant payment systems can get traction when they're rolled out effectively.
And open banking in Europe seems to be hitting its stride, finally.
Yeah, particularly Pay by Bank.
Yeah.
It's removing friction. Splitwise, the bill-splitting app, they're expanding Pay by Bank into France, Germany, Austria.
After seeing huge growth in the UK.
150% growth in Pay by Bank usage in the UK alone. People are clearly opting for it when it's available.
Why the appeal? Is it just easier?
It's often easier, yeah, but fundamentally it's usually cheaper for merchants than cards and potentially faster settlement.
Makes sense. And Zilch is using it with Plaid.
For one-off loan repayments in the UK. Tapping into that growing user base, apparently UK open banking users just passed 15 million.
15 million. That's significant adoption.
It really is. And it's driving consolidation, too. We saw TrueLayer buy Zimpler.
Zimpler, the Nordic pay-by-bank player.
Exactly. Strengthening TrueLayer's position in places like Sweden and Finland, where this stuff is really taking off.
And innovations hitting checkout security, too. That UATP Burbank thing. CPOII.
Card present over internet. Yeah, it's pretty clever.
Aimed at cutting online fraud.
Right. That $40 billion lost annually online. CPII tries to fix that. You basically tap your physical card on your phone and enter your PIN for an online purchase.
So it mimics an in-store transaction digitally.
Pretty much. Replicates that physical security layer online. Could dramatically cut down on CNP fraud and chargebacks. especially for things like airline tickets.
And in Brazil, Gispe is tackling cart abandonment.
Yeah, integrating MasterCard's Click to Pay. Brazil's cart abandonment is notoriously high, like over 80%. Streamlining checkout could unlock huge amounts of revenue there.
Okay, segment 4, AI and tech infrastructure. AI seems to be moving beyond just, customer service
That
bots.
was way beyond.
Yeah.
McKinsey dropped a bombshell projection this week. AI-driven agents could potentially cost banks $170 billion in global profits.
Whoa, hang on. $170 billion. How?
It's about agentic AI, autonomous systems. The idea is these AI agents will automatically move consumer funds out of those sticky, low or no interest checking and savings accounts.
The ones banks rely on for cheap funding.
Exactly.
Yeah.
And shift that money into higher yield products elsewhere. Basically, AI attacking customer inertia.
There's what, trillions sitting in those low interest accounts?
Around $23 trillion globally in zero interest accounts alone. So yeah, if AI starts actively moving even a fraction of that based on finding better rates, it's a massive threat to the traditional bank deposit model.
But how does an AI just move my money? Don't I have to okay it?
Well, the idea is it acts like a super smart financial advisor built into your app, or maybe a third-party service you authorize. It spots idle cash, knows your preferences, and based on permissions you've granted, initiates the transfer automatically.
Wow. Okay, that is potentially disruptive.
Hugely.
And on the business side, Zip launched AI agents too.
Yeah, for procurement, they have a price negotiation agent. Uses benchmarks, market data, advises procurement teams if they're overpaying on big contracts, helps them negotiate better renewals.
And OpenAI's Project Mercury, hiring Wall Street types.
Yep, former bankers paying them like $150 an hour to train AI models on really complex financial tasks, IPOs, M&A, restructurings.
Okay, so AI is moving way up the value chain, not just basic stuff anymore.
Definitely aiming for high-level strategic financial work.
Okay, shifting to basic infrastructure. That AWS outage on October 20th, that was a big one, right?
It was a noticeable one, yeah. Hit a lot of major platforms, Coinbase, Robinhood, Snapchat. Even UK banks like Lloyds and Halifax felt it.
Just underscores that concentration risk we talked about with TPSPs.
Absolutely. Which brings us back to regulators trying to balance risk and innovation. Fed Governor Waller had an interesting idea.
The skinny Fed account.
Yeah, a skinny payment account for fintechs. Basically, give them access to the core payment rails, FedWire, ACH, but without all the extras of a full Fed master account.
Extras like
Earning interest on reserves or access to the Fed's discount window for borrowing. The bells and whistles, as he put it.
So streamline access for innovation, but limit the systemic risk.
That seems to be the thinking. Make it easier for fintechs to connect directly to payments without becoming full-blown banks in the Fed's eyes.
Interesting proposal. Okay, segment 5. Let's talk deals, corporate activity funding, M&A. Busy week there too.
Very busy. Consolidation continues. Global Payments finally got the UK green light for its huge WorldPay acquisition. $22.7 billion deal finally cleared.
And Shift4 is buying again.
In exclusive talks to acquire Worldline's Bambora North America units, adds another 140,000 merchants in the US and Canada. They're really scaling up.
But the crypto M&A felt very strategic. Ripple buying G Treasury.
Yeah, $1 billion for G Treasury. That's a big move.
What's the play there?
Is Ripple moving seriously into the corporate treasury space, not just remittances? They want to help companies manage their liquidity, potentially using digital assets alongside traditional finance. It's about embedding crypto into core corporate finance workflows.
I mean, Coinbase bought Echo.
For $375 million, Echo enables on-chain community investing, token sales, starting with something called Sonar.
So Coinbase betting on the future of tokenized assets and community funding.
Looks like it. Building out the infrastructure for a more tokenized future beyond just trading Bitcoin and Ether.
And the funding rounds. Valuations are still sky high in some corners. Revolut.
Reportedly closing in on a $3 billion round, valuing them around $75 billion.
$75 billion. And they also got key licenses.
Yeah, full banking license in Mexico, and importantly, a MiCA crypto license in Cyprus. Shows that really strategic, regulatory-first approach to global expansion. Play by the rules, then grow.
And we shouldn't forget Africa. MoneyPoint raised a big round.
Huge. Over $200 million Series C, and they confirmed they're profitable, operating at unicorn scale, processing over $250 billion a year.
$250 billion annually, out of Africa.
Phenomenal numbers. Shows the scale and dynamism there. It's not just Silicon Valley or London anymore.
And finally, Stripe's blockchain project, Tempo.
raised a $500 million Series A, valuing that Layer 1 initiative at $5 billion.
$500 million Series A for a blockchain infrastructure project from Stripe.
Tells you where serious players see the future, right? Enterprise-grade digital asset infrastructure, stablecoins, tokenization. It's attracting major institutional-level capital now.
Right. Okay, before we wrap up, let's circle back to stablecoins for our second sponsor mention.
Makes sense. We talked a lot about issuance Sony Bank, Progmet in Japan.
Exactly. So if you or your company are thinking, how do we get involved in this?
Yeah.
Our sponsor, Paycademy, has something new.
Right. They've launched a very specific course on exactly how to become a stablecoin issuer.
Covers the whole process.
Everything. Different types of stablecoins, this nitty-gritty compliance under rules like the Genius Act, the tech stack you need, launching, operating securely. It's all in there.
Good resource if you're exploring that path. Okay, let's wrap this deep dive. We covered a ton today. Regulation tightening, stablecoins going mainstream, that $170 billion AI threat to banks.
Yeah, the themes are clear. Acceleration, tokenization, automation, reshaping finance everywhere.
It feels like the future is arriving faster than maybe we expected.
The convergence is happening now. Regulation catching up, innovation exploding, big money flowing in.
Well, if you want to stay ahead of this curve, understand these shifts as they happen, make sure you subscribe to the BayPay Forum YouTube channel.
That's youtube.com/BayPay Forum. More deep dives, more insights there.
And as a final thought, something to chew on.
Go for it.
Considering everything we discussed, stablecoins taking over cross-border, AI automating fund movements, if huge chunks of payments move on to these new automated tokenized rails, potentially bypassing banks' traditional interfaces, what's the new essential high-value thing traditional banks need to invent, like right now, to stay central to the financial plumbing?
Ooh, that's a good one. What's their indispensable role in that future if payments just flow?
Exactly. What do they need to build or become? Something to think about.
Definitely. The clock is ticking on that reinvention.
Indeed it is. All right, that's our deep dive for this week. Thanks for tuning in.
Catch you next time.